Hello, everyone, and welcome to our Tuesday night Community Connections. I'm Kelli Wilkins, your host from My Self Reliance, and it's so good to see so many people in the room tonight. We have an amazing panel discussion lined up for you, looking at your finance options. And given what has been happening in the budget lately, and what just happened today with some backflipping that the Labor Party is doing with the Greens, then you're going to really want to tune in tonight and find out where is the best place to invest your time, money, and energy. So before we get into all of that, and I introduce you to my amazing guests, I do want to let you know, for those who are new to My Self Reliance, we are a 5-year-old organization or movement that started during COVID, really for the purpose of helping people to navigate these challenging times. We have 8 key pillars that we work through, and each month we have a different focus. So this year already we've worked through food, health, relationships. Now we're on to finance. We'll also get to technology, communications, and faith, and looking at how we become more self-reliant in each of those areas. And so we have in-person and online events where you can connect locally, hopefully locally. We're building our hubs all across Australia. So if you're not connected to a hub at the moment, then I hope that you can connect with MSR. We'll find a hub for you. Or if you'd like to join us as a hub leader, we're always looking for leaders, and we're growing leaders across Australia. So we do have events on our website. You can go to myselfreliance.com.au, check out all the amazing events that are coming up around, and our retreat that's happening in September. It's called the Voice to Vision Leadership Retreat at Lily Ponds in Warranalla, just 3 hours north of Sydney. It's a beautiful glamping accommodation. So you're going to enjoy your stay in nature whilst learning to express yourself more fully. And that's what we want to do, is create yourself to be fully self-expressed. All right, let's jump into who are our guest speakers tonight. I'm going to bring them on. First of all, I'm going to bring on Adam Taylor. And Adam is the go-to guy for your silver and gold, helping you to be anonymous as you purchase your precious metals. Okay, let me introduce you to Milan. And Milan Rajcany was born to a noble family in Eastern Europe and emigrated to Australia in the 1980s. He has 20 years of global corporate experience in information communication technology as a network engineer and network manager. In 2016, Milan left his corporate career in pursuit of financial independence. Now he and his family manage a private family estate comprising of commercial, residential, rural, conservation properties, and various investment assets, including stocks, crypto, and shares. What's one thing that Milan wishes more people understood about wealth, money, or financial resilience? In short, what they don't teach you at school, that you are responsible for your own knowledge, wealth, and prosperity. Millionaire mindset, investment structures, assets and liabilities, cash flow quadrant, asset protection, tax minimization, ROI, leverage, financial independence, risk, and insurance. Don't you wish they taught that at school? We'd all be a lot further ahead. Welcome, Milan.
Good evening.
Good to have you here. Okay, now I'm going to bring on Simon. Simon is the founder and director of Inspired Property Group. With extensive experience in property investment and acquisition over the last 10 years, Simon has helped hundreds of Australians build wealth through strategic, research-driven property decisions. He is passionate about delivering tailored advice and helping clients achieve their long-term financial goals through property. What's one thing Simon wished more people understood about money, wealth, or financial resilience? That it's not that hard to get started once you understand the numbers. And that's what I was doing last weekend, was understanding the numbers. And so thankfully, I met Helen at the course that I was doing at Aaron Sansoni. So I'm going to bring on, welcome, Simon. Sorry. um, just unmute and say hello.
Hello, everyone.
Okay, now let me find Helen. Beautiful Helen. We need to have another female on the panel. So thankfully, Helen has joined us. Let me share a little bit about Helen.
Hi
Is it
everyone, my name is Helen Skazas.
Skazas? Thank you. Thank you. I was going to butcher that too early. This is Helen is a business coach, entrepreneur, investor, and former corporate leader who successfully transitioned from a high-performing corporate career into building multiple businesses and income streams. Today, she helps aspiring and established entrepreneurs create profitable businesses, generate additional revenue streams, and turn their expertise into scalable opportunities. Through coaching, mentoring, and real-world business experience, Helen is passionate about empowering Australians to take control of their financial future and build a life on their own terms. So I think that you would agree we have an amazing panel for you tonight. And first of all, I want to open up this conversation and let you all, each of you, share why you chose the area of finance that you did. So we'll start with you, Adam.
It chose me. I'd come through a pretty traditional corporate career, which at its peak, an IBM three-piece suit attacked my body. And I was a global product manager for them for a wee while. And part of IBM's training was to have inside their global finance team selling operating lease finance. So effectively selling large equipment, financing large equipment to the Telstras and so on of the world. And I learned how quickly and easy it is through putting decimal points in the wrong place, or adding a zero, or making a payment quarterly instead of monthly, to absolutely change the numbers and have the internal rate of return on a lease go from just about nothing to an absolute rip-off amount of money. So I learned money inside out from a leasing point of view and an asset management point of view at IBM. But I was dead broke 5 years ago. I was living in my van in Belgrave, in the hills, in Dandenong Hills in Melbourne. So circumstance gave me an opportunity when Daniel Andrews decided to lock the joint down. I thought, I'm not playing this game, and I rang a farm, a vineyard, an organic red wine vineyard in the middle of Victoria in a place called Dalesford. And I lived on his property for a year, driving a local taxi, and a friend of mine said, I want to buy some silver. How do I do that privately and quietly? And I said, what do you mean you want to buy some silver? And why are you talking to me? And he said to me, well, I'd quite like you to do the buying for me so that the market doesn't see my name. And so 5 years ago, I began working for my friends, opening accounts, across the major bullion wholesalers, the Bullion Nows and the Ainsleys and the companies we all know and love and deal with. But my point of difference was that I was buying from them under my account name with my KYC, know your client identity. And so my clients were enjoying access to gold and silver, whereas I was the buyer, or I am the buyer. So now, 5 years later, on paper, I look like I own millions and millions of dollars worth of gold and silver. But of course, I don't own any of it. What I do immediately after buying it is give it to my clients and charge them a fee for that service. So I'm a buyer's agent. I buy on behalf of my clients. Some of them are buying $100 a week. Some of them are buying $10,000 a day. And so now, 5 years into it, I've learned a thing or two about what the bullion market is, and particularly what it isn't in Australia. And yeah, does that answer your question or not
That
quite?
does, that does. And we're going to get into the market in a moment. So thank you for giving that background. Simon.
Yeah. So I started off in charity many, many years ago and then wanted to buy our first home with the wifey, but couldn't borrow enough to buy in the area that I wanted to. So we got referred to a property investment company, bought a property. 2 years later, they headhunted me, worked for them for a couple of years. Funnily enough, got fired for not doing enough sales. And the very same night, I was like, what am I going to do? I'm like, I'm starting my own business. So that was 7, 8 years ago now. All my partners moved across and have built the business from there. And I guess, with all the amazing different ways of making money, I always go back to kind of Robert Kiyosaki, who always says, invest in the things you understand. I understand property. I know property inside out. Doesn't mean that there aren't other great ways to make money, but I just chose property because I know how it works.
And if anyone hasn't noticed, we share the same last name. So when he said wifey, that's me. So, okay. So, Milan, over to you.
Okay, so thanks for reading out the bio. That gives you a bit of an introduction. So yeah, I spent 20 plus years in corporate ITs from the very early days of the internet, working for Telstra back in 95, putting the internet in, installing the internet. And then I moved around and I went to different disciplines, different technologies, and joined an American company where I spent 16 years as an engineer and then later as a data center manager, testing all the latest and greatest technology. And in 2016, I decided I had a little fair bit of visibility into what was coming. So decided to sell up and move out of Sydney, move to a quiet rural place and invest majority of our assets into property, but some into precious metals and cryptocurrency and shares as well. So now we're actually just managing the estate, several properties, and pretty much just living off the estate and running a business on the side as well. But majority of it is driven from the or derived from the estate.
Well, it's kind of like you've got a finger in each pie there, Milan. So, it's really good that you can kind of talk to each of the topics, really. So, thank you for that. Helen.
Well, I'm going to thank all of the previous speakers to start with because two of the three already mentioned that business is what got them to where they are, whether it's business in property or business in shares. So thank you for helping me with my strong argument that business is the place to be. For me, it was a little bit different. So I started a corporate career in pharmaceutical sales and then across in medical devices. And from sales, I moved across into a couple of marketing roles. And my last role in corporate was actually head of marketing for one of the billion-dollar American companies. So I had moved around a lot. And for me, it was quite simple. I actually got sick of making them money. So going through tenders, seeing what we were doing as teams, developing people, I got to the point that I was like, this is ridiculous. I know what to do. Why aren't I doing it for myself? Why aren't I doing it for other people around me? So for me, it actually then became a self-seeking journey to say investing in yourself and building a business is actually one of the few investments that gives you complete control over the outcome. And that's not something I felt in corporate, especially coming across medical. There were always constant restructures. When you look at markets, markets move, governments change policies like we're experiencing now, interest rates rise and fall. But the skills that you develop and the network that you build, your ability to be able to create value and generate income is actually something that can never be taken away from you. So once I sort of started on that journey, I was like, well, now that I'm learning this and building this, how do I then take other people on this journey? So for me, I look at now, we're in a massive period of economic change. Traditional pathways are becoming more and more uncertain, and so many people are looking for ways to create greater control over their future. And I think that's a huge testament as to why you're all here tonight. So for me, I just look at it and I say building a business, increasing your capabilities, developing income generating skills, it all allows you to create opportunities rather than waiting for opportunities to appear. And the greatest return that I've ever received hasn't come from any one asset. So I am involved in property, I am involved in shares, I'm involved actually in metals as well. But for me, the greatest asset has come from investing in my own education, in my own mentors, my own experiences, and my own personal growth.
Beautiful, beautiful. So, I, one thing I failed to say earlier was that tonight is not financial advice. We're not giving financial advice, but we are helping you all to understand what's going on in the market, what we're seeing, and what we need to be aware of as we go forward, and how you can best spend your time, energy, and money in what's going to, and then you can make up your own mind as to what's going to work for you. So let's talk about what's happening in the market right now, because there has been a lot of shifts lately. I guess this one impacts property more than anything else at this current moment. But yeah, do you want to talk to that first, Simon? Or...
Oh, I'll give it a crack. It's like watching a bad movie that you know is a bad movie, and you know you should turn it off because you're going to waste the next hour of your life watching it, but you watch it till the end and it only gets worse. I was kind of hoping it was got as bad as it was gonna, like, I was waiting for some stability where it all gets passed through and everyone's like, great, these are the new rules that we are playing by. And then today they just come out and completely change the rules again on the self-managed super fund, which I honestly think, not just for property, but I think that is probably the most shocking one that they could have done, because they say it's the rich people. All of my clients that invest in property in their self-managed super fund are not rich people. We are talking mums and dads investors, and some of you guys on here who have bought properties in your super funds. And it's not, and they're doing it for, what I think 1% of all people have invested in their self-managed super fund. So it's not a massive part of the market that makes the market go up that much. It's such a small amount. And the fact that they just did it with a deal with the Greens, just so the Greens could get a little bit more time to review their NDIS stuff, it's pretty bad. Like, I've had quite a few calls from accountants, and and the thing is about it as well, there's companies that I know that set up self-managed super funds for people to buy property. Like, this is the thing, their companies now, like, they don't have a company anymore and they employ a lot of people. So, it's kind of, I guess, sometimes with the government stuff, they make these changes not really knowing what it's really affecting down the path, right? So saying that, pretty bad on the self-managed super fund stuff that came out today. Other than that, we actually got our heads around all the changes to negative gearing and the CGT. So the CGT, the stamp duty, the capital gains tax, going to a CPI-based model doesn't really make that much difference. I did modeling over 10 years. You're 20, 30, 40 grand worse off over 10 years on any investment property. Not the end of the world. Negative gearing, they keep saying they've got rid of negative gearing. They haven't got rid of it. They've just got rid of your ability to write it off every single year. But now property investing is more like a business. So all your losses, you can just carry those forward. So if you sell the property in the future and you make a capital gain, you take those losses, you write it off against the gain. Or if you're in a really fortunate position and you've got other investment properties that may be positively geared and making you money, you can use those losses to write off those gains. So they keep saying they haven't stopped negative gearing, they've just changed it. And so also the other thing is, with the government saying it's going to save them $50 billion a year, it's not. All it's done is kick the can down the road, because when everyone starts selling properties at some point, they're just going to write off more of their capital gain because they've got the costs. So they're not making any more money back. They've just kicked the can down the road, which makes the budget look better for the next 2 or 3 years. So that's kind of my 2 cents worth. What's going on in the market right now, though, is, look, whenever there's uncertainty in the markets, people will move to places that they're certain of, which I'm sure, like, the gold and the silver is probably doing pretty well at the moment because people like to go into certain places. But the other thing is, for us guys anyway, it's a brilliant time to buy. We're being able to, the clients that are going ahead with us at the moment, we're being able to negotiate on properties that, 5-6 weeks ago, you couldn't negotiate on. and we've got some owner occupiers that are buying, and we're seeing properties that were listed 6 or 7 weeks ago for 2.5 million and now on markets for $2.2 million, because basically anyone that's selling a property right now needs to, because of something that's happening. Because if you're a normal investor, you would not be selling your property, you'd be keeping it because you get all the gains. So it is a really good time to buy if you can afford to buy into the market now.
Thank you for that. Milan or Adam, who wants to go next?
Yeah, I'll go next. Just to add to that property, look, we're quite heavily invested in property. I think we're around 80% of the assets are in property. And what we're seeing here in Australia, especially, is the government. The change of government is we've got a Marxist government now, so it's very socialistic. They're not trying to reward investors or small businesses. Both of them are getting slammed at the moment. So in regards to property, yes, if you've been in property for a while, you still can carry on and grandfather a lot of those benefits that you get with property investing. But just like in Canada, they took a hit, with the changes that they had there. So the property market went down. In Ireland, the property market went down. New Zealand, the property market went down. Who, by the way, don't have any capital gains tax. Right? They've got zero capital gains. So it's going to be quite interesting for investors that have been, heavily investing in Australia, and including foreign investors. It's actually favouring more foreign investors than it is, local investors. So it's going to be quite interesting with property. But I guess the biggest problem is, with property is also, the high taxes, land tax especially, right? So they cap the land tax thresholds, which actually puts more money into their pocket, right? So there's a number of changes that they haven't even discussed or openly spoke about that are hitting small businesses and investors, property investors alike. It also, the capital gains tax is not going to be just for property. It's also extended to shares and other assets where you make a capital gain.
It's a lot to get your head around. Adam, what do you want to say about it? Do you feel like, and like what Simon spoke to, that, when uncertain times, that a lot of people are heading towards precious metals? Are you seeing that?
I am on an accelerated basis, particularly after a little peak period that we had in January where I was worked off my feet. As the market rose, we European Westerners, those of us who are not in the Asian community, we go, oh, I've got this fear that I'm missing out on a rising market. And so late January and early February, I had record months. And then silver particularly peeled back by 45%. And we're back now at 65 US, where we were at 121 US in the last week of January. We're right now at $62.63 an ounce. So we're at we've had a 50% drawback in silver in the last 6 months. It's fascinating. So all my customers who were spending 20 and 30 and 40 and 50 grand, whatever spare cash they could find, alongside the ones who were spending 100 and 200 and 300, are now digging underneath the sofa, looking underneath the cushions for the extra $1,000 that they missed back then, because it's actually buying time now by comparison with where we were 6 months ago. It's really fascinating and weird, and we can thank the yellow man bad for that, because every time he farts, the market has an opinion about what it should do with its investment. It's really weird. So I think the Trump family are making a lot of money off oil futures at the moment.
Yeah, just to add to that. So from a crypto perspective, it's the same thing. So crypto, Bitcoin in particular, was at an all-time high. So it was at a high in October, 126,000 US dollars per Bitcoin, and that's now dropped to around 64,000 US. Right. So we're seeing a decline there. The stock market, though, just a warning on the stock market. The stock market it's the highest it's been in 140 years, right? And we've had a few crashes in the past, we're due for another crash in the next 12 to 24 months.
How about in the
When
next 6 minutes?
possibly shorter, it's sort of pushing the price up with AI, right, and all of the IPOs at the moment as well. So you've got the SpaceX IPO, which is unrealistic prices, by the way. And then you've got another two large ones coming up, which are all going to be like trillion-dollar IPOs. There's OpenAI, which is ChatGPT, and Anthropic, which is Claude, right? So they're all aiming for IPOs in the next, I think it's in the next 6 months or so. So just be careful with the stock market at the moment because it is at an all-time high, and all the indicators, and there's about 7 different indicators, like the Buffett indicator, and a few others. The only one that's actually, so they're all signaling that the stock market is overpriced. The only one that's at the moment still fairly stable is the volatility indicator, the VIX, right? Once that turns, that VIX is at 16. So that shows you how much volatility there is. And at the moment, it's fairly stable. Once that turns and the sentiment turns, you watch the stock market take a dive. And that could be 6 months, could be 12 months, could be 24 months. We're not really sure. But when it goes down, crypto will go with it, right? It will come down as it has historically in the last few stock market declines that we've had. Crypto will take a dive as well. So just keep that in mind when you're in relation to the cryptocurrencies. There are some stable coins that you can use. So when I say crypto, it's not just Bitcoin, Litecoins, Ethereum, etc. There are stable coins like USDC, which is pinned to the US dollar. And if you're buying it in Aussie dollars, right, you actually have done pretty well. You put, I think it's something like 7 or 8% in the exchange rate from Aussie dollars to US dollars. So if you're holding that USDC currency, you would have done pretty well over the last year. And when there is a crash, depends which currency you have, whether it's cryptocurrency or another exchange from another currency from another part of the world. Some of them do better during a crash than others. The exchange rate. So just keep that in mind at the stock market at the moment. I know we're not covering the stock market, but it is quite dangerously high at the moment.
Well, it's good to have you across that anyway, and we can bring that in. We'll come back and talk more about what the risks and the benefits are for buying into those things, and how Aussie punters can use that knowledge. But I'll just back to that and come to Helen. Helen, what are you seeing for small business, big business?
Look, there's no question that people are feeling squeezed from every single direction. So we know that we've got cost of living pressures. We know that we've got rising expenses. Housing affordability challenges are there. Global uncertainty, rapid technological changes. It's absolutely creating a lot of anxiety for a lot of Australians and a lot of people globally too. People are absolutely questioning whether strategies which worked for previous generations are going to work for now and are going to work for future generations. But at the same time, I actually see this as enormous opportunity. So, as has already been mentioned, like artificial intelligence, digital business models, global connectivity, and access to education have absolutely lowered the barriers to starting and scaling businesses. So people can now build brands, they can build communities like we're on now, and you can absolutely generate income streams faster than ever before. So emotionally, many people are operating from a place of fear and a place of uncertainty. And financially, they're searching for stability. I mean, we're all on here asking the same questions, and we all want to know what stable looks like and how soon we can see stable. So the biggest challenge I'm finding is that fear is often causing people to delay action. And action is actually exactly what's being required in the current market. And the people who are thriving in this environment, they're not necessarily the smartest people. It's the ones who are continuing to learn, it's the ones that are continuing to adapt, and the ones who are taking calculated risks.
So let's talk about planning, how people can actually start to utilize the kinds of investments opportunities that you guys are talking about. Tell me where when you're looking at it objectively, and Helen started to lean towards this, is what actions can we each take? Let's dive into that. Where would you advise people to start, with you, if they're coming to you and saying, okay, this is what I want to do with my investments, what would you advise them? What are the pitfalls? What should we be looking out for, and where should they start? So, Milan, over to you.
Okay, so look, it's good to be diversified, right? That's important, and I'm traditional, so I always go for tangible assets, right? So property is always done very well in Australia, in particular. It is tangible, they're not making any more land. Immigration is at an all-time high, so there's still going to be a lot of investment opportunities in property. Gold, silver, again, if you don't hold it, you don't own it. So that's important to know. So, those and gold and silver has been money for, thousands of years. Right. So, but it's important to hold it, right? And you can actually invest, and I'm sure Adam will talk to this, through your super fund into gold, silver, precious metals, cryptocurrency. So you can all do that now. So in regards to cryptocurrency in particular, it is maturing now. That life cycle, if you got in early, before it was regulated, before it was monitored, and before it was taxed by the government to whatever they can see, obviously, it was a good time to get in, right? But it is a speculative, I'm talking about Bitcoin in particular, it's still a speculative, asset. They say it is digital gold. However, comparing it to gold, they're two separate things, right? So if you understand how cryptocurrency works, right, through it's either through exchanges, it can be distributed or it can be centralized. You need to understand which cryptocurrency to invest in, which ones are public chains, as in others can see your transactions, and which ones are private chains, which ones are private transactions, right? That's important. The purpose, I suppose, is, do you want growth, or do you want to use it as a cryptocurrency as a means of exchange, as money, right? Bitcoin originally started off as money, but at the moment, it's more of it's speculative asset, which a lot of institutions are getting into now, right? So it's the days of making big gains are probably gone. There's still going to be quite a lot of gains in Bitcoin, especially as people move away from, they want to protect themselves against inflation, for instance. And they've done that quite successfully in countries like Venezuela, Argentina, and so on. Where the inflation forced by the government has gone through the roof, people put their assets into things like crypto because it's more liquid and they can transport it, and they can use it as a hedge against inflation.
Covered off a few great points there, Milan, and Simon is certainly giving your property a good plug.
Look, my thing is, and I'm saying this to my clients, is like, go back to when COVID hit, right? I had one client pull out of a property during COVID. You ask anybody that bought a property during COVID in that first lot, whether or not they're happy with where prices went to, right? So uncertainty always gives opportunity. And for me, I'm like, you don't know what's going to happen in 6 months, a year, 2 years, 3 years. No one has any idea, right? So what I always say to my clients is, if you can afford to buy a property, you can afford to do it comfortably, and you can afford to hold that property comfortably. Property has always been a long-term game anyway. So as long as you're not, you can't see any massive financial changes in the next 2 to 3 years in your life that's going to stop you being able to comfortably invest in a property. If we're looking at a 10 or a 20-year time frame for property, even with everything that's going on now, property will inevitably go up in value because we're just not building enough property anyway. The fundamentals are there. So I think when things like this happen, we look at the right here and right now and kind of, can catastrophize it a little bit. But hey, in 5 years' time, it could be a completely different place. In 2 years' time, the Labour government could get kicked out. Somebody else could come in, reverse all of those changes that they've made, and the property market goes back through the roof again. But if you're not in the market at that time to take advantage of it, you're not in the market. And I guess that goes for gold and silver and crypto and anything. It's like, if you're not in the market, then you're only sat on the sidelines watching everything happening versus actually being in the market and playing the game. And as long as you can do that safely and within your own financial responsibility, I think it's way more fun being on the court than sitting on the sidelines.
Absolutely. And I guess, if it gives you some stability as to where you live as well, that can help. But you don't always work with necessarily where you're living in terms of property.
No, we generally do. We generally do investors. I do a very few owner occupiers because their criteria is a lot harder.
Mhm. Adam, what do you want to share about if someone's looking at getting into gold and silver? Where should they start? What should they be aware of? How do they know if it's right for them?
Can I tell you a story?
Love a story.
Let's just come with me on an imaginary story. Let's rewind the clock, let's say 110, maybe 120 years, and we're all standing on Times Square in the middle of New York. And in your left hand, you've got $14 US, $19.10, 14 of them. And they buy you today, 1910, they buy you a beautiful Italian suit. You're wearing it if you're a man, and it's a man suit. If you're a woman, imagine yourself in the most beautiful clothes that are equivalent to a man's three-piece suit from Milan. So there's your $14. You could have alternatively spent it on an ounce of gold. So let's imagine that we've got both. We've got the $14 in one hand, the ounce of gold in the other hand, and the suit is on your body. $14 worth of beautiful Italian, the finest. Now we're going to put you into one of H.G. Wells' time machines, and we're going to cough you forward 120 years. We're going to bring you to today. And all the items you're holding come with you. So the ounce of gold is coming with you, the beautiful suit you're wearing is coming with you, and the $14 cash is coming with you as well. Now you'll immediately see the problem with this picture. And you'll notice that if you were to go to Milan today, 2026, and buy yourself a three-piece suit, the weird thing about it is it costs you about $4,500, not 14. So you don't have enough cash to buy a suit in today's current time, if that's all you're bringing with you from the past. Oddly, the ounce of gold in your left hand is valued at a little bit over $4,500 US. It's valued at about 4,700 at the moment. And in Australian dollars, it's about $6,700 an ounce. So the suit and the metal have equivalent value to each other, where the currency, not the money is the metal, the currency is the cash. The currency, of course, will buy you, well, Times Square 2026, maybe a coffee, maybe two if you're lucky, maybe an ice cream. So the reason why this plays out this way is not by accident, it's by design. The currency is created to distract you from the money. So the money has been put here by nature. Every ounce of the metal, gold, silver, platinum, palladium, or rhodium, those are the five precious metals, gold, silver, platinum, palladium, and rhodium, they were put here by nature. Now, I'm not a person of any particular faith, but if I was religious and of serious faith, I would say the maker put them here. And the interesting thing about that is that they were finite. It costs effort to pull them out of the ground. There is a fixed amount of them. I can't make gold. I can't make silver. I mean, goodness me, wouldn't it be wonderful if any of us could? And that's why we created, mankind, womankind, humankind, we created the paperwork that lets us keep track of the value of those natural resources. So every forest, every lake, every mosquito, every car, every building, every train system, every city, every mortgage contract, every house. We decide how many of those currency paper tokens it takes to fill up one of those items. You, you realize that the idea of a dollar is the same as the idea of a kilogram. A car can be measured in kilograms. It can be measured in dollars. A house could be measured in tons. It can be measured in dollars. Dollar is a unit of measurement. It's not a physical thing. We put the paper to it to create it into a physical thing, but it weighs $1, or 100 of them weigh $1. We make $1 in a factory, or the government does. It costs them 34 cents to make one of those beautiful green slips of paper. I'm going to repeat that again. It costs our government 34 cents to make this. So what is it $100 of? And the answer is it's not $100 of anything. It's $100 in the same way that we all decide that today was Tuesday. We agree as a community. But they're mucking around with the value of those dollars through the instruments that they have, which are things like the quantity of them, who gets to see and use them first, the taxation, inflation, and things that are particular to your industry, Simon, things like the taxes on property taxes and capital gains taxes and all that stuff. They manipulate the currency, but they cannot ever manipulate the money. Gold, silver, platinum, palladium, known as a species in its own right. Specie money. And so my clients are busy acquiring as much of their metal as they can at the moment, because they know that, based on my story about 1910 to 2020, they know that the money moves forward and holds its value. I can't highlight it any more deeply. We also know that, and I'm so glad to hear Milan's brilliant ideas about crypto. And I'm very much from the old school. If I can't, like you, Milan, if I can't hold it in my hand, it doesn't exist. And so for every cryptocurrency token where someone says, "Oh yeah, we'll be using Bitcoin in 100 years," I ask them if they're still using fax machines now, 30 years later. Or are they using that Morse code tapping machine? I'm in Los Angeles and I need support from the army. I tap out on a Morse code tapper 150 years ago. We're being invaded by the Indians. Send reinforcements. Well, I don't use that to communicate with my friends. I don't go da 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 da. I send them a frippin' SMS, or I go into Messenger, or I'll email them, or I'll just call them, because that was a technology that came and went. And cryptocurrency, the blockchain, and all things associated with it are a technology. It's here right now, and it's at its peak, and it will fade over the next 10 to 15 to 20. It will completely disappear. Those who are having their way want to have their way. It will be entirely replacing all things that are currency right now, and we'll be stuck. We'll be stuck.
Mm-hmm.
So the reason we're going to back to metal, is that metal doesn't lie. An ounce of gold is an ounce of gold, and every ounce of it I have, I'll still have, and they don't know I've got it. That's the real secret. They don't know. They don't know.
That seems to be a really powerful opportunity, is what they don't know these days. So, Helen, let me come to you. Going back to business.
Yep.
It's always been my first love, and certainly a place where you can, you put yourself in the driver's seat. So over to you. What do you want to share with us?
So I think, first of all, I don't know how I'm going to top that coming in after Adam. So thanks for the challenge. But there's a couple of things for me. So one thing that I say to all of my clients, irrespective of what business they're in, what industry they're in, education always needs to come before execution. And that can probably be said for the exact same thing, whether we're looking at property, whether we're looking at metals, at crypto, at anything. I would never invest my own money, and I would never tell somebody else to invest their money in something that they can't afford to have it tied up in. So for me, the advice is always very simple. It's never invest your money if you can't afford to have it tied up. Never invest in something that you don't understand. Now, for me, the reason my passion comes back towards business is when I look at property, first of all, I need a much bigger chunk of money to be able to enter the property market. Not saying it's impossible. I think it's a very safe place to be. But the foundation that you need to have built either needs to come from an income stream from a job that you've got or from a business that you've got. You need to find a way to attain that money first. Then, when you've got that property, you make money at two opportunities. One, if you've got it as a rental, and then you're getting income from that rent, providing it's not going back to the banks or it's not negatively geared. Or two, when you sell it and you hope to get upside. With crypto, a lot of it is if you're trading and you trade on a high, or you're then potentially getting dividends on whatever crypto it is that you've got. Metals, it's the same sort of thing. You're looking at trading. So a lot of it is out, from my perspective, it's out of my control. So I look at that and I'm like, for me, it's more of a gamble. I'm not saying I don't do it. I absolutely do diversify portfolios, but I look at what can I afford to risk and to what levels. For me, business is more about diversifying the income streams. So I know that I can then have direct sales. I know that I can upsell somebody in a business. I can cross sell someone in a business. I can look at doing partnerships with another company that doesn't compete, and we can then look at collaborating. Whether you're looking at online sales, you're looking at licensing, you're looking at referral partners, there's so many additional ways of increasing and generating additional income streams. And I think when we are looking at the current time, the benefits for me are about your increased earning potential. It's having a greater control over your financial future. It's having the ability to be able to create multiple income streams. It's building a valuable skill set which will stay with you for life. You know, it's not abnormal to hear of the story that this person's gone through bankruptcy, they've come back out of that, and then they've got multi-million-dollar businesses or companies after that. It's because they're reapplying the skills that they've learned along the way. It gives you flexibility and freedom. You absolutely get the personal growth and the confidence, and you create assets which may still be sold or potentially passed down. Now, it's not without its risks. I'm not here to say business, 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 that's the way to go. There's never going to be a guaranteed path to success. The biggest risks, though, from what I've seen, it's actually not usually the market. The biggest risks come from the decisions that people make. So whether it's that they're investing money without having a clear strategy, whether they're trying to grow too quickly and they haven't built out the foundation solidly, whether they're taking advice from people who have actually never achieved the results that they want, whether it's that they fail to understand cash flow. It surprises me how few people in business can comfortably sit down and read their profit sheet or their balance sheet. And it's really taking the time to understand that, to say, well, when things are moving up, things are moving down, what does that actually mean? And how do I move that number? How do I change that number? It's also seeing that people underestimate often the time and the effort that's required to potentially turn a business around. Business is great when it's working, but the growing pains and the pain that comes from when a business is in the red is not something that I would ever wish upon anyone. But it's knowing that when emotions drive decisions, that's when things are really challenged. And we see that the same in the stock market, like when people buy high, sell low. Same with property. If they're buying high, they're selling low. A lot of it is done on emotion rather than done on financial advice or financial literacy. So I guess the biggest thing for me is always put your money in something that you understand. And successful people, they're not lucky. Often they're just very well informed and they're very well prepared.
Thank you for that. I want to add the part of being self-reliant for me is that if everybody in this chat, if you all had some skill, which everyone has something to offer. And if you take your skill or your knowledge or your service and turn it into something that is transferable, you have a business. and most anyone can turn anything that you are good at into a business. And I think as we go forward, we are all going to need something to be able to, if we are not trading in gold or silver or crypto or Bitcoin or dollars, no one can ever take that away from you, your knowledge, or that is such an asset, and your skills are an asset. So each of you could look at what you are good at and think, how could I make a business out of that? And if you can take yourself out of a job and into a business, then you're developing yourself, and that the only thing that you can take is your own personal development. So gentlemen, I want to put it to you guys, how is what you're doing also part of your personal development journey?
If I can interject now.
Yeah.
Very good point. I don't know if you're going to see this, if I can put that up. Oh,
yeah, cash flow quadrant.
Yeah. So I've got a whole stack of books here, but unfortunately I've got a background on. So to develop the skills, right, you need to be able to take control of your own money, your own assets, right? So you can hire financial advisors and so on, but at the end of the day, you're better off skilling up. So when it comes to, for instance, real estate, I've got probably about 20 books on my desk at the moment. So that was the first place I started. I just looked at mentors that were already there. So I was looking at high net worth individuals and seeing how they got where they got to, right? And a lot of them got wealthy through real estate. Cryptocurrency wasn't mature at the moment. Wasn't even, when I started, wasn't known. So real estate was still, it was actually had quite a lot of growth. So got into real estate because I understood it. There was a lot of books about it and so on. But I think the key was understanding the mindset, right? You need to go to books that actually change your mindset. So the cash flow and the Rich Dad, Poor Dad series, that was a good start, right? And I've got a whole bunch of others here. So The Rich Man from Babylon, Millionaire Next Door. Even the basic one, this is good for people that wanted to do a lot of budgeting, understand investment. So this is The Barefoot Investor, right? Not more for beginners, but they're quite good. And then as you get more and more advanced, changing the mindset, I've got quite a few books here. I don't know if you can see some of those. But some of the ones that I've got here is The Millionaire Mind. Now, how do the rich, what sort of structures do they use to buy property and other assets? How to become a millionaire without really working. Anyone can be a millionaire. So it wasn't about being a millionaire. It's the mindset that these people have used and the vehicles they have used to accumulate wealth. And then how do they use, what do they use methods to preserve the wealth and their assets? And I've got a whole bunch of stuff here on self-managed super funds and so on. There's probably another 10 books on my desk here and a whole bookshelf, not behind me, but in another room. Right. So I guess the key is, right, is to understand, to educate yourself. Start with the basics if you don't understand anything. Have a mentor. That's very important. And someone that's been there and has actually gone through the process. And then I think it was Helen mentioned cash flow, right? So cash flow is very important. If you understand that if you're an employee, you're going to be working for someone, you don't really own any assets in that scenario, and you've got to be taxed heavily. Then you can be a sole trader, so you've got a little bit more control. You just created a job for yourself, but you've got a little bit more control with that. So you're running your own business. What Helen is talking about is actually being on the right-hand side of the cash flow quadrant and being a business owner with a system that generates, the business that generates then income, or being an investor. Right? Being an investor that takes advantage of some of the benefits you get with, say, for instance, depreciation schedules for a property, or precious metals or crypto, whatever's down, you're going to the asset if it's undervalued, you buy it then. Don't buy when it's on the hype, and then you sell when the asset has appreciated.
Brilliant, Milan, and those books are really important to be on that mindset journey. Anyone who has not developed their money mindset can definitely make a lot of money and then lose it just as quickly. Yes, go for it, Adam.
what's taking place for us as a society and as a culture, and frankly at the philosophical and the psychological level, is an offer. I'm just going to say that again. What's taking place for all of us right now is an offer. We're being offered nature, or we're being offered digital ones and zeros in a computer. Fundamentally, the diversion that's about to take place, quite softly, it's not going to be warfare. We're not going to hit each other or throw weapons, but there will be a divergence in our culture. The people who want to have their iris scanned or sit on a photocopier and have their bottom copied, or whatever the process is, that might be a chip implanted in their forehead or their finger, but they're going to be offered a digital life, an imaginary life, where ones and zeros on the screen of their phone tell them where, when, how much, and if they can spend their money. No, you're outside your zone. You cannot use this petrol station. No, you're outside your zone. You cannot blah, blah. Insert the conversation here, whatever it is. So those levels of control are digital controls, and they don't exist in nature. A tree is a tree. A butterfly is a butterfly. A lump of coal, iron ore, steel, aluminium, gold, silver, these things are nature, and some of us are staying with it. We're not coming into the world of ones and zeros. I'm sorry.
I always, Kelly, I always say, for me, it's like the old Matrix for anyone's watched it, red pill, blue pill kind of thing, and he can go in the Matrix and out. And I think for me, I've always said, understand the system so you can take advantage of the system. So when you need to leave the system, you can get out of the system, right? So I
And,
take
and you
advantage.
can run alongside it as best you wish and touch up against it as much as you wish. As much as you wish, not as much as they wish.
Correct. So we have a property that we're growing all of our stuff on, and we want to be self-sufficient in the next couple of years. But I still use property as a vehicle to create wealth and build wealth for
Right.
myself. And I pump that money back into my own property to make me self-sufficient. So at the point, if we ever needed to, we can jump out of that system and be self-sufficient by ourselves.
Beautiful.
Before we jump into questions, just wrap up with what advice that you want people to know, your message that you want to leave with people tonight. Maybe Helen, I'll come to you.
So the big one for me is absolutely increase your value before you increase your expectations. So Kelly said earlier, each and every one of you have skills on here and can start a business offering that service or that product as early as tonight. So over the next 6 to 12 months, focus on becoming more valuable in the marketplace, whatever that means for you. Learn a new skill, build stronger relationships, improve your communication, understand sales and marketing, develop leadership capability. The market will always reward the people who can solve problems. So the more problems that you can solve, the more opportunities that you'll be able to create.
Helen, I think I want you to say that again at the end. I love that.
The more problems you can solve, the more opportunities you will create.
Beautiful. Beautiful. Thank you. Milan, wisdom and advice you want to give?
Okay, parting device. Make sure you have multiple income streams. Don't just rely on your job. Financial education is the key. Financial independence. That's what you should be trying to achieve, whether it's through property investing, being a passive investor, or through businesses and so on. Right? You want to have financial independence, right? Live well below your means. A lot of people aren't at the moment. Avoid being trapped in expensive lifestyle. Right? So forget about the marketing by the banks and so on, and whoever else, what you need to own. Build capital to make and make it work for you. Right? So we're in capitalism. Make sure you've got capital, you've got assets that then generate income or cash flow. And value personal freedom over consumption. That's what a lot of them are, we're forgetting that we're in a consumer society, and our personal freedom is more important.
Absolutely. Yeah. Freedom is my self-reliance. It's not being dependent on the system. It's not being dependent on governments. And the more that we can um, have the knowledge so that we can be self-reliant, that's what we're here. What's what it's all about. Simon.
I guess my one is the only certainty in life is there's always uncertainty. And the moment that you think you've got everything handled, something will always come and pull the rug out from under your feet. And I think in life, it's about being ready for those moments and then just being willing to pivot, roll with the punches, work it out, work through it, just. And so, for us, there's all those guys who are investing in property at the moment. It's just be willing to pivot, roll with the punches, work it out. Change is inevitable.
If you are able to buy property, you know, the old saying, they're trying to move us on as 15-minute cities and you'll own nothing. Well, they're going to have to try much harder because we are not moving. We are here. So, Adam.
I'd like to finish up with an idea that you may have heard in the past called counterparty risk. It's a financial concept that says you either own the thing you're holding or you don't. You either own your house or the bank still has a mortgage over it. You either own a document or someone else is interested in it. Maybe it's a check, a document, a piece of paper. So counterparty risk doesn't exist in the precious metals world because it's a natural product. It's yours. There's no one else interested in the fact that it's yours. But 200 years ago, we used to take it in a little bag, and behind the bars, there was this bloke who would give you, or woman who would, probably a bloke actually, 200 years ago, would give you a receipt for it and say that he's holding your gold for you in the vault. So the risk, the counterparty was him, the banker. And nothing's changed. If you go into your bank today and give them your funds, in law, as soon as it passes into their care, it's actually theirs. They can draw it down and you can use it to offset their liabilities immediately. It's not your money. So it's not money, it's not yours, and it's not there. But apart from that, it's perfectly real and perfectly legitimate, right? So counterparty risk, whatever it is you want to buy and own as your investments, make sure no one else is a counterparty that holds an interest in it. The share certificates you'll find at your broker are not at your broker for your Telstra shares. They're off at Palantir or Black or some other company in their vault, and technically they're not yours. In law, every share you own is not yours in law. Gold, though, if it's in your pocket, it's in your pocket.
Tina's asking, so where should you put your money?
Yeah.
And Tina, for the answer to that is there's a myriad of options. And the one is the one that you are most cross, right? So you need to do your own research, your own finding out what's most important to you, because that answer is going to be different for everyone on this call. But happy to open it up to taking questions. Does anyone, and whilst we're taking questions, can each of you please put your contact details into the chat, because I'm sure that if you would like to know more about how to expand your business or get some business coaching, Helen might just be the person you're looking for. I certainly learnt a lot at the course last week, and that's where I met Helen at the Aaron Sansoni course. And so she is well versed in not just building your business and your brand, but multiple businesses. So if you've heard from Milan tonight, how he's across a lot of areas of investment opportunities. So Milan, if you can put your contact detail, if you'd like to be contacted. And of course, Adam, I know you put your phone number in earlier, but you might want to just pop that in again, or any other contact details that where people can find you. So does anyone have any questions that you would like to ask? You can either pop it into the chat or do a little pop up your hand so I can see who's got questions. and for anyone on the panel tonight, because there's a little.
Kelly,
Well,
Pablo's got a question.
Yeah.
Do you have
Can
a
you hear
question
me?
for someone on the panel, Pablo?
Well, I've got a question for just about everyone who's been speaking. Why the hell? I can see the reason to invest in gold and silver, but why the hell would you even approach real estate?
Good
Maybe I can
question.
answer that one. And
Well, yeah,
we're
Milan,
we're
go
not
for it,
limited
buddy.
to buying real
Really?
estate just in Australia. Just remember, you've got to think
Yeah,
globally these days.
well, I definitely would buy overseas. There's lots of countries offering now because of empty houses, but
So real estate is it's not just residential real estate, right? As an example, we're investing in rural property through a self-managed super fund that is not only got the ability to generate income from leasing out the land, but also generates money from the resources that are on that property, right? So you've got more flexibility. With commercial property, it's the same sort of thing. You've got, commercial property is not for the faint-hearted, but if you can get into commercial property and especially if you've got an industrial, at the moment it's doing very well. Retail is down, but industrial units, storage units, they're doing very well, right? So it doesn't have to be
what if
just the
I told
traditional
you a
residential.
common investment? What if I informed you of a common investment that doubled at twice the rate of real estate?
Pablo, there's probably lots of investments that you could look into.
No, this is a big one. I've seen 500,000 go to 1.25 in the space of 3 auction terms.
So that's another area that we should probably explore. Tonight we don't have time to explore all the areas of investment.
It's investment in what area is it? It's investment in art and artifacts, which has been my life.
Artifacts and art.
I think,
And
Pablo, I think what it comes down to, and your question is a valid one, is again, it goes back to what I was saying earlier, is you invest in the things that you're comfortable with and that you understand, right? So you do artifacts. I would be like, I have no idea about artifacts and how to invest into artifacts. But if I met an expert that knew, then I might be interested in it.
Well, if we're talking about artworks, we're basically talking about second-hand goods.
Yeah.
Right?
Yes, and I think that's a very good place to look for where to put your super, buying through your super. So
you can buy artworks through your super fund.
Yeah, that's very valid.
If you spend about $400 and sign up to certain websites, they will give you the sales history of a painting. It's like the horse racing form of the artworks.
And that's a very good place. Tonight, we're not going to go into all of the different types of investment opportunities that are out there, but it is a very good one.
What a good place that is. Yeah.
Brilliant. Thank you for that, Pablo. Is there any other questions we have tonight before we wrap it up?
Victor had a good one. I was just reading Victor's, which said you can't own property. You purchase a title which is registered with the government, then they own the lot unless you put them in trust. So yes, there are particular ways that you can put properties into things for better protection and stuff like that. If I'm honest with you, I don't really care if the property, if the company, if the government own some of the properties that I've invested in, because I'm not planning on keeping them till nothing. I'll sell them and cash it in. So again, it's that 1 foot in, 1 foot out. It's like I'll use the system to generate wealth for myself. The government, if they want to own it, fine, until I sell it, because then they don't own it and I don't own it. But I use the system to make wealth for myself. Like, I guess that's still that, using what you can to get ahead.
Great. Any other questions? We've been very blessed tonight to have all this knowledge in one room, and not only just with our panel, but obviously there's lots of people with information in our gallery as well. So it's really fantastic that you're here and that you're able to share with us your knowledge. We do need to have you come and join our community so that we can learn more from you. And sorry that we weren't able to spend more time on other kinds of investment opportunities tonight, but these were the four that we chose to look at and go deep on. And certainly this is the month of finance as part of our pillars of self-reliance. And it's really a good opportunity to come back into our hubs and to bring you as an expert into the hubs and talk more about this in depth in person and a person event. Of course, next week we have a talk from for our hub leaders and members, all about the keys of bringing out the best in people. And so next Tuesday night is not an open night like it is tonight. This is a community connection, so anyone is allowed to come on and join our community. Next Tuesday is for members and hub leaders and so forth. So if you would like to be a guest on next week's call, it is $10 to join the week, but it's going to be an awesome conversation with Dr. Gary Wallman, who is leading our Voice to Vision leadership retreat. So it really is about raising leaders next Tuesday. So I'd love to have you there. Just to finish up, was there anything else that came in the chat? Any other questions that anyone had? Yes, Adam.
Kelly, I've just privately messaged you a random number between 1 and 50. You know it, I know it, but no one else in the room knows it. I'd like you to invite the room to private message you their guess, and we'll give an ounce of silver away to the closest guess. So you're guessing a number between 1 and 50. Kelly knows it, and later on Kelly will tell me, because you're sending her a private message for your number guess between 1 and 50, and if you're closest, you'll get the ounce of silver.
I'm assuming I'm not allowed to message my wife right now and ask her what the number is.
Simon, by default, I love you very much, but clearly you're not eligible.
Damn it. Damn it.
All right. So everyone else, ready, set, go. Send me your number to be in the chance to win.
Oh, you don't have to do it right now. They can do it any old time. But just if you let me know who let me know who it was that's the closest by a SMS tomorrow or some, and get a postal address from the winner, and I'll send off an ounce of silver to them, which at that market today is $110.
Amazing. So if you are, do they need to text it to me? I better.
When you notice that they are the closest one to the number I've sent you, you'll need to contact them and find out a postal address for that person.
Well, they better have a way of messaging me.
Don't do it now because we kind of got everybody's attention. It's not really right.
Okay, very good.
But
thank you for that, Adam. That's very generous of you. Appreciate you. That a bit of fun. Add a bit of fun to our night. Thank you, Helen, for being with us tonight. I really love bringing that perspective, rounding out our conversation. At first, we just had the three fellas on the call talking about investment opportunities. And then when I was at the course last week and I realized, hello, aren't we our best investment? Don't we all need to spend time on ourselves? And really, haven't we got a lot to contribute? And we can, there's not anyone who needs to start with a huge money down. I think, a lot of millionaires are all self-made, and absolutely my self-reliance was created in COVID times out of nothing, running on an oily rag, but really doing big things in the community, in the world. So if I can do it, anyone can do it. So thank you, Helen, for representing yourself and business and opportunities. Thank you, Milan, for being here. You have a wealth of knowledge across the whole kaleidoscope of financial opportunities, and we really appreciate you, and also referencing all those amazing good books that I have read and loved, and recommend everyone read. Readers leaders are readers, readers are leaders. But also Milan will be coming back and joining us on another call down the track around communications. So how to be able to communicate if the grid was to go down, or when it does, or even before it does. Thank you, Adam Taylor, bringing your perspective. We get a beautiful glance of the past, present, and future when you speak, and also our connection to nature and to God. And so I appreciate your sharing with us tonight. And then finally, Simon, thank you for generously spending this evening with us and bringing to us the whole world of property. I want to say what you haven't said is that it's actually achievable for a lot more people than think that it is achievable for. And because I know the people that you've helped with property. And so thank you for your perspective and sharing with us tonight. And again, thank you to everyone who's in the gallery, who's here with us and listening in. We appreciate you being here, and your contributions and showing up makes a difference to community. So I thank you, and I want to invite you all to come back again next Tuesday for another great conversation. All right. Night, everyone.
Thank you so much. It was a great meeting. It was wonderful listening to all the speakers. Fantastic. Thank you.
Our pleasure.